A financial setback in the billions is shaking Elon Musk's Tesla in recent times. The world's largest electric car manufacturer, led by the richest man on the planet, is facing a steep decline. Simultaneously, another manufacturer in the same sector is starting to shine more in the market and may have already surpassed Tesla. So, what's behind this dramatic fall? And which company is on the verge of overtaking it? Let's find out together. Dreams are the driving force behind ideas, ventures, and changes in the world. Two opposing companies operating in the same market are an example of this. Tesla, for about a decade, has held dominance in the electric car market. However, this supremacy is under threat and, in a more concerning scenario, may have already been lost. In the midst of this battle, a well-known billionaire investor plays a significant role. During 2021, Tesla sold approximately 1 million electric vehicles, solidifying its position as the industry leader, deserving respect even from traditional car brands. The expectation for 2022 was to surpass this sales figure. Although this goal seemed attainable, not all news was positive for Tesla and Musk. The situation worsened in late April. During that period, Tesla experienced a significant drop, something that could be called a major setback. In just a few days, the company lost over $125 billion, an astronomical value. For one of the largest companies in the world, this indicates a problem. Interestingly, the origin of this problem is not within Tesla but with Elon Musk. Musk, as is widely known, decided to buy Twitter in late April 2022, with the deal's value hovering around $44 billion. This sparked fears among investors, who began to question whether Musk would be more focused on managing Twitter than Tesla. This concern intensified when Musk sold $8.5 billion worth of Tesla shares to finance the acquisition of the social media platform. However, the Tesla CEO's ambition to acquire Twitter is not the sole reason for the company's decline in the capital market. There is a complex set of factors contributing to the current state of affairs, leading to Tesla's billion-dollar decline. Over time, it becomes clear that these problems are not only financial but also strategic and possibly linked to the company's leadership itself. Another crucial factor in Tesla's narrative is the presence of a rival, BYD, a Chinese automaker that is causing sleepless nights for Musk and his investors. BYD, the second-largest electric car brand, is naturally Tesla's biggest competitor. Being Chinese is a competitive advantage. With a domestic market of over 1 billion consumers, its home country is the world's second-largest economy. BYD, which stands for Build Your Dreams, shares Musk's dream of a more sustainable world through electric and hybrid vehicles. But BYD is not limited to cars. The company also manufactures electric bicycles, forklifts, rechargeable batteries, buses, trucks, and solar panels. This diversification of products puts it in direct competition with conventional vehicle manufacturers like Toyota and Honda. Out of its 14 car lines, only 2 do not have an electric motor. The majority are electric, including all buses and trucks. With this wide range of products, BYD sells over 400,000 vehicles annually. There is no doubt that it is Tesla's biggest competitor, even being called the Chinese Tesla. Interestingly, BYD's founder, Wang Chuanfu, has earned the nickname Chinese Elon Musk. As entrepreneurs from emerging countries, they now lead 2 of the world's largest electric vehicle manufacturers. This description could apply to both Musk and Chuanfu. They are both magnates in the electric car industry, each with their own dream. For Wang Chuanfu, that dream materialized in BYD. Executive Wang Chuanfu abandoned his academic career to dive into the entrepreneurial wave that swept through China in the 1990s. This entrepreneurial movement was in line with the country's strong industrialization process and the opening of the Chinese market to multinational companies. At the time of BYD's founding, there were only 20 employees. The company quickly specialized in rechargeable battery technology to compete with Japanese suppliers. However, just 3 years after its foundation, BYD signed contracts with Nokia and Motorola, industry-leading companies at the time. While Motorola is still a major player today, its influence was significantly greater in the early 2000s. Wang Chuanfu, however, was aware that BYD couldn't rely solely on the battery market, no matter how profitable it was. Therefore, around 2003, the same year Tesla was founded, BYD decided to explore the electric car market. Many wonder if Wang's decision was well received. The answer is yes. One of the people who showed the most interest in what BYD produced throughout the 2000s was Warren Buffett, the billionaire known as the Oracle of Omaha. In 2008, Buffett announced that he was starting to invest in BYD and now holds a significant stake in the company, representing 20.5% of the outstanding shares. However, this percentage may have changed drastically in recent years. When asked about Buffett's investment in BYD, Tesla founder Elon Musk laughed during an interview with Bloomberg. "Have you seen their car?" he asked. "I don't think they have a great product. It's not particularly attractive, and the technology isn't very strong." Today, Musk likely has a different view, considering the growing threat that BYD poses to Tesla. Buffett's company, BYD, is determined to consolidate China's dominance in renewable energy sectors such as electric vehicles, batteries, solar, and wind power. According to data filed with the Hong Kong Stock Exchange, BYD sold 641,000 electric vehicles in the first half of 2022, an impressive increase of nearly 315% compared to the same period in 2021. In that same period, Tesla delivered 564,000 vehicles. Of those, 255,000 were sold in the second quarter of 2022, down from the 310,000 shipped in the first 3 months of the year. This indicates a slight downward trend for Tesla. However, an important detail should be considered: out of the over 600,000 cars sold by BYD, 50% were purely electric vehicles, while the other half were hybrids. This means that Tesla still leads in sales of purely electric vehicles. But BYD's numbers are impressive and certainly worry Tesla executives, especially as the company is experiencing a sharp decline in market value on the American Stock Exchange. At the same time, Elon Musk was involved in problems with the acquisition of Twitter. Tesla, however, justifies the decline in sales numbers due to the semiconductor shortage and the lockdowns in Shanghai caused by the pandemic, which impacted the company's production and supply chain in China. This is because Tesla's Shanghai factory accounted for half of the company's global production in 2021. In May 2022, the facility was closed for 22 days due to the city's lockdown, and production levels only returned to normal in mid-June. However, BYD did not face the same problem. Analysts attributed BYD's resilience to its vertically integrated supply chain, which made the company less vulnerable to supply chain disruptions during the lockdowns. Meanwhile, its rivals had to reduce production due to chip and battery shortages. However, not everything is good news for BYD. On July 12, 2022, BYD's US shares fell 11% after Hong Kong's Central Clearing and Settlement System recorded an increase of 225 million BYD shares. According to Reuters, this is the exact number of shares Warren Buffett held in the company. It is interesting to observe how good and bad news alternate in the business world. The competition between BYD and Tesla exemplifies this perfectly. Tesla is the absolute leader in the segment, but BYD may be on the verge of taking its place. If we consider only the raw numbers, one could say that BYD has already surpassed Tesla. However, this is a battle that is far from over.